When it comes to retirement accounts, we have a lot of choices to choose from. Is a traditional IRA the right choice to get you what you want? Stick around until the end of the video to find out. Sup, I'm Elijah with Financial Anatomy, covering what a traditional IRA is. So, what is an IRA in general? IRA is actually an acronym and it stands for Individual Retirement Account. In other words, it is a retirement account that you set up on your own. In it, you can hold money or investments such as stocks, bonds, mutual funds, index funds, and ETFs or exchange traded funds. An IRA can be set up in a bank or a brokerage. There are a variety of savings and tax advantages an IRA can offer depending on what type you set up. This video will focus on the traditional IRA. For demonstration purposes, we'll throw in an example. Here is Mary, who just graduated from medical school and has a job as a nurse. She makes $80,000 a year. Mary decides she wants to start saving for retirement. She goes to her bank and opens up a traditional IRA account. Mary decides to deposit $6,000 into her IRA. This money is tax deductible. She doesn't have to pay taxes on the money until she withdraws it. The current maximum contribution she can make in a year to her IRA is $6,000. Keep in mind, if she decided to open a Roth IRA also, the total amount of contributions to them combined cannot exceed $6,000 annually. This is because Mary is a young woman. If she was over 50 but younger than 59 and a half, her annual contribution limit would increase to $7,000. Since she deposited $6,000 into a traditional IRA, this drops her taxable income for the year down from $80,000 to $74,000. Carrying on with our example, let's take a look at a different scenario. Instead of using the bank, let's say Mary goes online and sets up an account with a brokerage and opens up a traditional IRA account. Once the account is open, she buys $6,000 worth of ETFs, bonds, and stocks. The money Mary makes on her investments, also known as capital gains, are not taxed. As long as she trades in her IRA, the capital gains will not be taxed until she withdraws from the IRA. If Mary ever withdraws from her IRA before the age of 59 and a half, she will have to pay a 10% penalty as well as taxes on that money. There are special exceptions such as medical expenses and tuition coverage that falls under the IRS's hardship distributions, and a traditional IRA can be withdrawn upon before the age of 59 and a half with no penalties. For more information on what qualifies as a hardship distribution, visit the IRS website in the description. As mentioned before, the traditional IRA has a yearly contribution limit of $6,000 for those under 50, and for those over 50 is $7,000. And like most IRAs, you are required to start making withdrawals at the age of 70 and a half. So, how does the traditional stack up to other retirement account options? This type of retirement account gives you full control over what you want inside of it. You can put stocks, bonds, mutual funds, ETFs, or all of the above in it. It is completely up to you. This type of IRA also allows you to lower your taxable income, and when you do withdraw when you retire, if you're in a lower tax bracket, you will pay less in taxes on that money. Of course, everything has duality to it, so what are the cons? It might already be on your mind, but a big con is if you need money now in the account for whatever reason, you could end up paying a 10% penalty. Another big con is the sense of paying taxes later. If we take inflation into the equation, you could end up technically paying more in taxes in the future than you will be paying for them today. Last but not least is the fact that your retirement will be entirely your responsibility. No one is selecting investments for you. When compared to something like a 401k, that can be a con for some. With all that being said, is a traditional IRA the best fit for your needs? If so, how is it? Which one of the pros is the biggest reason you'll consider opening one? If not, which of the cons keeps you away from it? Let's talk about it in the comments below. Be sure to check out my other videos on the other retirement accounts at your disposal, and don't forget to like and subscribe if you're new, and consider joining the Financial Anatomy newsletter to receive my free ebook, Still My Financial Blueprint, and stay up to date on new videos being released. I'll see you in the next video. Don't forget to get out there and take control of your financial destiny.